For years, real estate recruiting looked a lot like a high-speed treadmill. Agents spent their careers chasing the biggest immediate payout, constantly running faster just to keep up. Brokerages competed for top talent by throwing cash at them. They relied on aggressive bidding wars, offering massive signing bonuses and short-term incentives to get a signature on a contract. This created a culture of constant movement. Agents routinely jumped from one company to the next every few years. The brokerage was treated as a utility, a completely interchangeable machine to process transactions. But a massive commission split means nothing if the company paying it cannot keep the lights on. If an agent relies solely on a high split while the brokerage lacks a long-term operational foundation, that agent is highly exposed to the elements. Right now, three massive macroeconomic forces are dismantling that old commission-based model. This chart shows exactly what agents are facing. First is commission pressure. Regulatory changes and evolving consumer demands are systematically driving down the top-line profit margins that agents have historically relied on. Second is severe market volatility. Interest rate spikes and inventory shortages whip those remaining margins around, making it nearly impossible to forecast predictable yearly income. Third is heavy industry consolidation. As overhead costs rise, massive centralized entities are buying up the market, wiping smaller, less capitalized brokerages entirely off the board. Combine those three compounding pressures and the math changes. We are seeing a massive flight to stability. Instead of grabbing the quickest cash bonus, agents are actively looking for a shelter that ensures their business will survive for the next 10 years. This map shows the exact scale required to weather that storm. This is the operational footprint of Howard Hanna, a brokerage network that spans 15 states across the eastern and midwestern United States. Because it operates as a privately held, family-owned entity, it has a unique structural advantage. Instead of slashing budgets to appease public shareholders during a market downturn, the company continues investing capital into its infrastructure. By controlling mortgage, title, and insurance services under one roof, this highly integrated platform gives independent agents the massive operational scale they need to compete against industry consolidation. That deliberate strategy of investing through multiple market cycles provides exactly what modern agents are looking for right now: a stable shelter from economic volatility. To see how top-tier agents are shifting their strategies, look at the recent talent migration in the Philadelphia market. This graphic tracks the sheer volume of capital moving into the Howard Hanna network. Through a partnership with Art Hurling, 130 agents transferred licenses, bringing nearly $290 million in annual volume. The Jen Mascaro team moved an additional $180 million into the ecosystem. Then, the Coulter and Castillo group stacked another $250 million on top of that. These high-performing teams are passing on the standard flash-in-the-pan cash incentives offered elsewhere. They are moving because they require the operational scale, shared values, and deep local roots that this specific model provides. Active recruiting momentum always grabs the headlines, but the quiet, structural reality of a brokerage is found in its agent retention. The recently published Courted 2025 State of Brokerage Recruiting and Retention Report tracks exactly where agents are staying long-term. This ranked list illustrates a critical anomaly. Out of the top 25 brokerages in the entire United States, Howard Hanna ranked absolute number 1 in agent retention. This data proves an important behavioral shift. Once agents secure a stable operational platform that actively supports their growth, they stop actively looking for higher immediate commission splits. New business models will inevitably emerge, and recruiting competition will remain fierce. But the currency agents value most has changed. The new competitive advantage is a combination of visible leadership, deep local roots, and protective operational scale. Top agents are no longer choosing a brokerage for a quick payout. They are choosing a permanent, secure foundation where they can safely build their careers for the next decade.